Hello, everyone. We'll get started in just a couple minutes here. We're about 2 minutes to the hour, and I might give it 1 or 2 minutes just after the hour because we'll have folks trickle in, and then we'll go ahead and get started. For those of you just joining us, I mentioned earlier we're going to give it just a couple more minutes as folks trickle in. Probably about 2 minutes after the hour, we'll get started. Okay, I'm going to go ahead and get started, so I'm respecting everybody's time. Hello, all, and welcome, excuse me, welcome to our webinar. My name is Michael Murdoch with CUCollaborate, but before we get started, just a few housekeeping notes. Everyone is muted, but please put your questions in the chat. We'll have a quick Q&A at the end of this session. Also, this is being recorded, and the slides and recording will be sent to all those who have registered. I'll send that off tomorrow morning. Finally, if you'd like to schedule time with us to learn more after the session or during, I will put that into the chat. Two meeting links, one if you're currently a client and one if you're not a client. I'll identify which is which, but we'd love to meet with you. And moving on, quick intro about us. We are CUCollaborate. We champion credit union growth through disruptive innovation. We combine industry-leading strategy and software to help credit unions achieve growth and minimize risk. But we're more than just consulting experts. Our aim is to help credit unions adapt, grow, and succeed long term by offering innovative solutions, insight, know-how to help them do it. We also look for creative solutions to take our clients out of their comfort zones and into new phases of growth, and we do it by building pioneer software solutions that help our clients achieve success. But now I'd like to introduce our host, Sam Brownell, who is the founder and CEO of CUCollaborate. Sam has worked in the credit union industry for over 10 years. He thinks every American should be a member of a credit union. In 2014, he founded CUCollaborate with the aim of facilitating impactful collaboration within the industry. Before launching CUCollaborate, Sam was the Associate Vice President of New Product and Market Development at Callahan and Associates, a credit union consulting firm. He's conceived, overseen development, and had success launching multiple new growth strategies and solutions for credit unions. I've talked enough, so I will go ahead and hand it over to Sam. Sam?
Thank you, Michael. Good afternoon, everybody. Thank you so much for, I guess, good morning, potentially, for maybe someone in Hawaii, Alaska. Yeah, thank you so much for joining us today. I am going to share my screen and sort of just talk about what we have built at CUCollaborate around measuring demographics and social impact and member benefit and why we have done it. And actually, really honestly, it comes back from my days when I was at Callahan and Associates and using their software like peer-to-peer to help credit unions measure their performance and for board reports. And one of the things that I always felt was really missing was the mission focus. So banks, for-profit, investor-owned, they have clear sort of like profitability, profit maximization as their goal. Credit unions are in honestly like a more difficult position when it comes to performance metrics because they need to be considering how to balance profitability and fulfilling their mission as member-owned, non-for-profit cooperatives. And we felt like there was a real gap in the measurement of those impact metrics and understanding member demographics and how their benefit, a credit union's benefit, is sort of like distributed across their members or within different communities, and how credit unions are sort of defining what is success. So we started with creating some tools which you could do off of your Aries data. You would need to have an economist and data scientist and do a lot of math, but what we essentially do, and I think is one of the most powerful things that we do, is quantify risk-based member benefit. So we look at each product that a credit union has provided their members down to the actual individual account level to then back into what is the benefit to the member. So how much more money a year does that member get because they received that product from the credit union rather than the average bank. So we're basically benchmarking credit unions risk-based pricing against the average bank on an individual product by product level over time. In this view, we started with sort of community impact and really we're looking to work around advocacy with leagues to build our data consortium. We have realized there are a number of other ways that this is very beneficial around like community development, advocacy. Also, we believe there's potential around raising public deposits so that you could communicate to, and you can do this under any type of geography, but to a city, to a county government, to anyone, what is your current impact within that geography, and then track that over time and share it with them. We also then sum the total member benefit. We calculate jobs created, sustained, contribution to GDP, what percentage of members and loans go to rural parts of a community, economically distressed parts of the community, different income levels, credit tiers, and race and ethnicity. And the way that we do race and ethnicity is using a Bayesian improved first name, surname geospatial model. So that takes in weighting from the member's first name and really like a probability that they are of different races based on first name, last name, and the census block group that the member lives in. And from that, there is a modeling methodology which uh, determines sort of the probability that a person is of a different race or ethnicity, which can help see how your benefit is being distributed across demographics as well. Um, and then we also made it so this could be exported, and you can also pull in the individual member benefit per account and per member. We've done the same thing on much more detail around demographics, so people, credit unions can understand who they're serving well and who there is an opportunity to serve better within their community. So again, race and ethnicity, income level, how much people are spending on housing costs, which we were working with a credit union recently, and who wanted to focus on targeting marketing to first-time mortgage home buyers of a certain loan amount and home price, and you can figure that out from here too. So you could do very targeted marketing to focus your lending on certain demographics, your marketing for lending. And then the thing that we're really excited about, and I think this gets to really sort of strategic planning, is benchmarking all this. So right now we have to do it outside of the software, but we can provide analysis on the amount of benefit that you are producing on average compared to peers, and then by income levels, any type of really sort of like cross section you want to look at, and by product type too. So you can understand which of your products are creating the most benefit for which types of members and which, yeah, all of the things that I've listed so far. So like credit tiers, income levels, race and ethnicity, types of communities, and understand your business model, quite frankly, in more detail than I believe most credit unions are able to analyze right now, and then understand we have the backbook data. So we have a data consortium of over 200 credit unions now who are contributing their data to the consortium, which then allows us to identify who's doing a particularly good job serving different, basically maximizing profit and benefit, and within different demographics and by product type and how they're having that success. And so this is all information that um, we can produce for credit unions and can really help with understanding how well you're fulfilling your mission and margin and driving the success of your credit union, which is uniquely different than what it means to be a successful bank. This is also the same analysis and sort of process that we're using for our merger network too. So the other thing that we have built is a way, it's sort of like benchmarking, but instead we apply it across credit unions. So instead of comparing one credit union to another, it is credit union to credit union. So we're benchmarking basically like the risk-based pricing of one credit union to another to identify which credit unions would basically serve the members of another credit union better to ensure that the mergers that we're making introductions around are in the best interest of their members. And I can pull that. Well, I'll go back to this. Are there any questions? I know we have a large group of people. I was honestly expecting a smaller group and hoping to have this be a little bit more conversational, but does anyone have any questions at this point?
Sam, we do have a couple of questions. One, what's the error rate of that methodology that seems to be making a huge demographic assumption of the actual served population?
So there you exclude the ones that there isn't a high enough probability for. So if, and actually I will show that screen again really quickly. But in here we show the match rate, which sort of you can back into what the error rate is here, but in this case it's a 27% sort of like, I wouldn't say error rate really, I would say like we didn't, there isn't a high enough probability to impugn race for that member. So then this shows just the aggregate numbers of the members that there is a high enough probability for, and it excludes the remainder.
Sorry to jump in saying this is Chris, your colleague and friend, but isn't the BIFSG methodology like vetted and approved from like I'll say like scholarly perspective, absent any other criteria? I thought that this is one of those things that at least like academia has weighed in on or opined on.
Yes, it is the statistically most like accurate way of impugning race. There's if you're an ESIP recipient or really there is no substitute basically for primary data collection, but in terms of modeling race and ethnicity, it is the highest standard. The fair lending model uses just last name and is less accurate. Yes. Any other
Thank
questions?
you. Yes, we do have a few others.
Yeah.
Can we adjust the probability threshold for those predictions as a quality control mechanism for different purposes, for example, R&D versus impact reporting?
Yeah, so we can provide the backend data which has the probability and then yeah, produce that. It's not within this dashboard, but we provide the likelihood, the probability on each individual member, and you could then do the analysis in the with the standards that you want to use.
I like this question. Top of mind, what's the more interesting challenge you've seen credit unions addressed with your product here?
Man, so far, I think the most interesting challenge is probably around marketing and product development. Um, I'm really excited about its use with mergers. I'm really excited about the different ways it can be used to really sort of like measure what is in the best interest of members. And um, I think that's essential to credit unions fulfilling their mission. So I feel like we're just scratching the surface on sort of what the potential of the analysis does so far. But really, it is primarily in terms of like impact within a credit union. I think marketing and product development are the two ways that we've seen it used the most. Very helpful. A lot of our clients use it for advocacy, annual reports, and community development. But yeah.
Another question for CDFIs, can the BISG predictions be used to report to the CDFI fund alongside self-reported demographic data for CDFI certification?
To date, no. So they have specifically forbidden like proxy methodologies, which they would consider the BIFSG model being a proxy methodology. We There's an opportunity to get new methodologies approved by the CDFI, and there has been some talk about trying to get this methodology approved, but currently it is not a pre-approved methodology.
And lastly, when doing merger collaboration, is any information collected on cores and products currently offered to each credit union member?
Yes. So we capture cores in a different way, but we do capture what cores credit unions are on. And then the products that are offered to credit union members is partially captured within Aries files. So you have the product type code within the Aries files, but then also on call report data, you have additional product offerings beyond that that wouldn't necessarily be specifically share or loan product types.
We had one last question. What features do credit unions get really excited about? I feel like we somewhat covered this, but if there's anything you can think of specifically, Sam, that you'd like to add.
Um, I think for credit unions who are particularly mission driven and focused on serving the underserved, this is very exciting in terms of helping them understand, yeah, who they're serving well, who they're not serving well, and digging, really drilling down to like a very detailed level to identify opportunities to improve it. So, um, yeah, I think generally going through this type of report with credit unions where it is benchmarking their performance on individual product levels is the part that excites. I'm really going to be like credit union boards the most. Yeah.
Those were all the questions that we had in the chat currently. If you do have other questions, please continue to share them. And I did put some meeting links in there. If you'd like to meet with us to learn more or have additional questions, please absolutely schedule time with us.
Thank you, everybody.
Yeah, again, this is recorded and I will send out to everybody tomorrow morning, everybody who's registered. So keep an eye out for that. Again, if you have questions or would like to engage with us, please reach out. Thank you so much, all.
I will just add also for anyone who's dropping off, if there are certain things that you would like us to measure, please let us know that too. This is a thing that we just became a CUSO, raised a good amount of money to invest in our analytics. So if there are things that we are not measuring or quantifying that you would like to be able to measure and quantify and benchmark against other credit unions, sort of understand the context of your numbers versus others, that'd be really helpful for us to know. And credit unions feedback is what drives our product direction. So any thoughts there would also be very welcome.
Great. Thank you, Sam. I will go ahead and end the webinar now. But again, please reach out if you have questions. Please let us know if you have additional thoughts or other items that you're looking to measure, as Sam mentioned. And we look forward to chatting with you all.
Thanks, everybody.